So if you live in a high-tax state like California or New York or New Jersey, gone are your incentives to buy and or own a home. The Republicans are blowing it real time, but tax experts are licking their chops, right? We are going to need them now more than ever. Joining me now from Southern California, master tax attorney and adjunct professor at the University of San Diego School of Law, Ronson Shamoun. You're our resident tax expert, Ronson. You can sense my disdain over this. What I'm seeing here is not tax reform. This is tinkering with deductions. And I say in a big picture, and I say kindly, who are these people to tell me which deductions I can keep and which are being taken away?
Well, it just boils down to their train of thought. I mean, they're all about the Reagan's trickle-down economic surplus, where if you lower taxes, people don't save cash. They don't have cash sitting in the bank. And when they have lower taxes, they're going to spend that money, and that dollar spent is going to move the economy, more jobs, more income, and
which I agree with. But this is raising taxes in some cases, right?
For certain people, yes. I mean, you can't just raise it across the board. There's going to be some checks and balances. So it's not all across the board, but you have to give and take to get something across.
All right, so let's look at the tax brackets.
Sure.
The House plan ostensibly proffers 4, but in reality there are 6 because there's a 0 tax bracket in there that no one wants to talk about. 0 tax bracket, and then there's a special 6% tax on top of the 39.6%. The tax brackets in the Senate, 7 of them.
Yes.
Thought we had tax simplification here. So I guess in the end, when we look at all these brackets that they're proffering out there, it all depends on the partitions, where these things come down in terms of your income level, correct?
Exactly.
And so, any idea where the breaks are?
Well, we have it at 0, like you said. You have the 12, you have 25, and the original plan was at 35%, but I guess there was some pushback, and now they brought back the 39.6, and then the additional 6% for high-income earners.
Does this look more simple to you, what we have currently in place?
You know, I think the rhetoric about it being simple is just kind of taking it a little too far. I think regardless of whatever the outcome is, simplifying our tax system is not going to happen. I mean, there's always going to be transactions, property sales, carry forwards, carry backs. There's so much to the Internal Revenue Code. They're using the word simple in the sense of maybe lesser codes or reducing this or less itemized deductions, and simplifying it in the sense of, you know, fewer items for certain deductions. But other than that, I don't think it's simplified at all.
All right, mortgage interest. Let's go to that. The House version puts a cap on mortgage interest. These would be for new purchases. You'd no longer, by the way, be able to write off your interest on a second home. Home equity lines, you wouldn't be able to write that off anymore. That's gone. I mean, they're taking all these things off the table. The Senate plan, no change. So in the end, first of all, I believe this takes away the incentive in some states to go out and purchase a home or even own a home. That's just the beginning here. We'll go to the property tax in just a second. But it really depends on which state you live in this category, doesn't it?
Yeah, exactly. I mean, for the states like California, New York, who have high real estate values, I mean, you know, $500,000 doesn't get you much in Southern California or New York City. But for most of America, pretty much all the middle red states are going to benefit because the average house is about $567,000, they say, across the country. So for the big high states, yeah, it's going to be devastating. It's a big deduction.
And that brings us to SALT, which is a state and local taxes, which includes property taxes. The House version, you can deduct up to $10,000. Isn't that nice? They're going to let us do 10. Here's the problem, Ronson, is that the average deduction is somewhere between $3,000 and $6,000. So that figure looks nice, but in reality, it doesn't do much. And the Senate's going to eliminate all of them. Now, if you're filing, again, in these same states, but all states have a version of state and local taxes, this could be a real hit. I know there's offsets in terms of what the Republican plans are doing. There are certain offsets, but this potentially could be another big hit, right?
Oh yeah, this is the biggest one, especially where state and local taxes are big. New York City, there's many state and local taxes, and people take advantage of that deduction for many, many years. So yes, in the high states, it's going to be a big deal, definitely.
That brings us to the estate tax. And the estate tax is also known as the death tax, which is straight out of the Communist Manifesto. This is pure redistribution of wealth. In the House version, they phase it out completely over 6 years.
Yes.
In the Senate version, they would double an exemption, but otherwise they keep the estate tax in place. Now, I want to make a point here. You deal with a lot of clients. This doesn't just hit the wealthy. If you hit a certain threshold, say, for example, your family owns a dry cleaners, or some business that makes a moderate amount of money, but the valuation happens to hit that threshold, then you are going to be paying estate tax, correct?
Yeah, it's all taxed on your gross value of your estate. And so when you're those high income earners, or I'm sorry, high net worth individuals, it does affect them. And there's always going to be battlefields over this issue. You know, you got one train of thought that says, hey, you know, what motivation do I have to work hard to build this huge company if only 40% of it's going to go down to Uncle Sam when I die? So you've got that, you know, both trains of thought. But you know, it doesn't generate that much money. Only 0.2% of the United States is affected by the estate tax. So
Isn't that amazing? That's a staggering figure. But the United States government is trying to claw back as much as possible from these people. How about allowing people to keep that dry cleaners and not have to sell it? See, that's the net residue in a situation like this, right? They would have to be forced to sell the business to pay the taxes.
Yeah, I hear you. I mean, I think, you know, that the Senate planned by raising the exemption or making it a lot higher than the $5 million is kind of like that artful balance. And so they could keep it in place and get the super wealthy. But, you know, being worth $5, $10 million generation, you have 5 kids and you've built this enterprise, you know, it's that artful balance where, you know, where do you draw that line? And I think it is kind of low for those people who really work their lives and have these generational businesses to kind of keep them going. So I think a higher rate should work and appease most people.
Well, I believe that the estate tax, aka the death tax, shouldn't exist in this country, in a free society. Absolutely, it's a horrendous thing. That brings us to the corporate tax. Now, the House version, they're doing it right. They're just cutting it from 35 to 20%. The Senate has figured out a way to screw this one up. And that thud you're hearing is the stock market reacting to the Senate saying, hey, you know, we'll do a corporate tax cut, but we're going to wait a couple years down the road. And the stock market, of course, has already built in this corporate tax cut. And the way I frame a tax cut for corporations, Ronson, is a tax cut for all Americans. Because, as you know, in a business, if you have high taxes, you're going to pass those high taxes on to your clients or people who buy your hamburgers or whatever. So if you get a tax cut, hopefully the price of hamburgers will not be going up. So are the clients with whom you deal, are they thinking that this thing is actually going to go through, or are they thinking that the Republicans are going to screw this one up?
No, I think most people are fairly optimistic about it. I mean, with the corporate tax rate going down, really what people are excited about is it's not just going to be for C Corp, for pass-through entities. And most small businesses operate as S Corps. And so right now, if you operate as an S Corp, it flows through as a K-1 onto your individual tax return, and you're subject to individual tax rate. Now what they're going to do is have S Corps, pass-through entities, qualify for that lower corporate tax rate. And so in the end, those individuals will benefit. But they all believe it's going to happen and are counting on it.
Okay, let's say there's some sort of giant version of all the different elements that I talked about. Do you see a win here, politically speaking, not for the American people? But do you see that this is fulfilling any kind of campaign promise that the Republicans are going to overhaul taxes? Or do you see this as just rearranging the deck chairs on the deck of the Titanic?
I do see it as working to some extent. I mean, it's what really Republicans, most people who are either Republican or Democrat, usually, at least what I've seen, are for Republican tax policy. And I think the tax deductions, or sorry, the tax plan will work potentially, and people are excited about it. And I don't think it's there for the media and for their platform, but I think they really wholeheartedly want to see lower taxes. They believe it's going to work, and mainly they believe it's going to stimulate the economy, and it's going to take about a year or two for that to kind of flow through and see how it plays out. And you can't really judge it after the first year or second year. You're going to kind of have to see it over a 2 or 3 year period. But I truly believe that taxes are going to be lowered across the board. and it should hopefully stimulate the economy like it's intended to do.
Well, we hope it does, but bold, this is not. Bold would be a 12, maybe 15% flat tax. Get rid of all deductions. Now, that would be bold. I think the Republicans, just like on Obamacare, are blowing this one. Ronson, thank you.
Thank you.